Welcome to Southwest Florida Real Estate Update, hosted by area realtor Jim York and York Real Estate Group of Downing Fry Realty. Our show will bring you the most up-to-date information about the local real estate market, featuring leading experts in the real estate field.
Good afternoon and welcome to the Southwest Florida Real Estate Update. I'm Morgan York with the York Real Estate Group, and we're joined today with our host Jim York and his guest Leticia Rocha, Senior Vice President and Director of Residential Lending with First Florida Integrity Bank.
Thank you, Morgan, for the introduction. Well, Leticia, thank you for coming.
Thank you for having me.
I'm excited that you came. Tell us a little bit about your bank and yourself. I know we've done a lot of business with you in the past couple of years, so why don't we first tell us a little bit about yourself, and then maybe we can go into the bank so some of our viewers can, understand what you people are about.
Sure. My name is Leticia Rocha, and I am the Senior Vice President, Director of Residential Lending at First Florida Integrity Bank. I've been in banking since 1983 and in mortgage lending since 1992. First Florida Integrity Bank is a local community bank, and we have several offices in town. We have a mortgage department, and we do lots of residential lending in town.
And where are your locations, if you could just give our viewers that?
Our home office is located on Craft Road. We have a branch on Craft Road, and we have a branch at Fifth Avenue. We have a branch at Anchor Road, Creekside, Ave Maria, and Marco Island.
Well, the mortgage business is changing, right?
Yes.
Or it has changed.
Yes, that is correct.
So I know you guys are right on top of it. So maybe you could just tell our viewers a little bit about the DoddFrank, what people I think have heard of the DoddFrank Bill, and what changes have been implemented over the years and the new ones that are being implemented just shortly.
Most importantly, the new one that's going into effect on October the 3rd of this year is that the Consumer Financial Protection Bureau has consolidated the 4 existing disclosures, and they're consolidating them into one. They're taking the good faith estimate, the truth in lending, and the closing statement, and they are consolidating it into what is today called the TILA-RESPA Integrated Disclosure. They're taking those 4 disclosures and making them into 2. We will have a loan estimate, which is basically your fees that are going to be itemized, what the loan could cost you, and then they're changing the closing settlement statement into what is being called as the closing document.
And what is the purpose? Don't they get a good faith estimate now?
They do. However, the Consumer Financial Protection Bureau felt that these 4 different disclosures were confusing to the consumers, and therefore they have decided to consolidate these. It will give the consumers an opportunity to, when they're out shopping for a new home mortgage, they can compare one bank to another to help them make a decision as to what best suits them.
And part of this bill, how about, do they have to receive the documents before the loan is closed? How many days before? What complications are there?
Yes, it's going to be a little complicated. It's going to be definitely a learning curve for all of us, real estate agents, closing agents, lenders. As it is now, the consumer must have their closing documents, as far as their HUD settlement statement, at least 48 hours before closing. Now we're going to be where they must have it. It amounts to about 7 business days prior to closing, and there will be no exceptions to that.
So I know I'm maybe putting you on the spot here, but I got a lot of questions for you, but I'll keep it simple. Is some loans or some things don't close on the date that they're supposed to close on? How's that affect if it's delayed a day or 2?
It's going to definitely affect the way things are being done nowadays. There will be no exceptions. Therefore, if you have not gotten your closing disclosure to your consumer or your borrower on time, you will not be able to close, which is going to make things difficult going down the road and probably necessitate many extensions on sales contracts.
Okay, and is this going to add any additional cost to to the consumer by preparing all this or doing all this paperwork?
No, the cost
No.
is not being passed on to the consumer. It's a cost to the lenders and the closing agents, but the cost is not being passed on to the consumer.
Okay. Well, the next thing is that, you know, people are always asking when they're going for a mortgage, they want to know, first of all, what do they do? Do they apply for a mortgage, obviously? But one big thing is the debt to income ratio. Can you maybe explain how that's worked today?
Yeah, I can. Actually, the Consumer Financial Protection Bureau takes care of the consumer first. And sometimes they make things a little bit more complicated, but it truly is to protect the consumer. The debt to income ratios have changed over the years. You may have in the past heard of your traditional 28-36, which meant 28 on the housing ratio with a 26 for a total debt, total global debt. Well, now we have a debt to income ratio that cannot exceed 43%. They came out a few years ago with what is called a qualified mortgage. In order for the loan to be a qualified mortgage, your ratios cannot exceed 43%. That includes your housing and all of your other liabilities such as car payments, credit cards, and the housing also obviously includes principal, interest, taxes, and insurance. So
and HOA fees.
Correct, and HOA fees. So if your debt to income ratios exceed 43%, you are considered to be a non-qualified mortgage. That doesn't mean you can't lend to somebody if their ratios exceed that. That just means that another regulation will then kick in, and that is the ability to repay rule. In order to make a loan where the debt to income ratios are over 43%, you need to be able to prove that this individual had the ability to repay this loan when you knew that their ratios exceeded the 43% and made this a non-qualified mortgage.
So those mortgages, those non-qualified ones, are they still sold in the secondary market, or are they loans that are within the bank?
Typically those are loans that are kept within the bank because standard Freddie Fannie guidelines, you have to stay within it has to be a qualified mortgage.
Right. Okay, then that's interesting. How about foreign investors? What's their ratio? Does it vary from them?
At our bank, we do offer foreign national loans, but we keep that ratio at a 40% because the risk is a little bit higher. You're lending to a borrower who is not a U.S. citizen and whose primary home is outside of the country. So yeah, but those ratios are typically kept at 40%, and your loan to values are generally lower than a U.S. borrower could get, 90 or 95, even 97, sometimes even 100% financing, where borrowers who are from outside of the U.S. typically are putting 30% down.
30. And what kind of documentation would they need to apply for a loan with you?
It depends. We have a list of countries that are on our approved list of countries that we lend to. For Canadian borrowers, we can obtain a Canadian credit report, and their tax system is very similar to ours, so we can obtain tax returns. For other countries, those that are on our list, we typically do the non-traditional credit, where we get credit reference letters, and we get pay stubs and employment verifications from their employers. But that's how the foreign borrowers, that's what their qualifications are.
Okay. Well, Leticia, we're going to take a little short break, and we're going to be back in 1 minute.
When picking a realtor, don't just pick anyone. Pick someone with experience. Pick someone with a proven track record. Pick a realtor like Jim York from Downing Fry Realty, the #1 brokerage with the most real estate transactions in the area.
My husband and I had very specific ideas about what we wanted in our new home. Jim York was able to help us find the home that was ideal for us.
With over 20 years of real estate experience in Southwest Florida, Jim York has negotiated over $200 million in sales contracts. Selecting the right realtor is a critical decision that can earn you thousands when selling or save you thousands when buying.
Jim also helped us with a mortgage lender and a good real estate attorney. He went that extra mile, and his experience says it all.
Call Jim York for a no-obligation meeting at 239-273-6727 or visit his website, www.naplesyorkrealestate.com.
Welcome back. Leticia, I know you offer a lot of different mortgages in your bank, which I think, for my clients has been a very easy process with your bank. So maybe you could just go over with some of our viewers, because I think you offer some unique programs. Maybe start with, condo loans.
Yes, we do. We offer a variety of different loans. Typically our loans are portfolioed. We have adjustable rate mortgages. We offer loans on condominiums, co-ops on a case-by-case. Condotels, we've done 1 or 2. We offer lot loans. We offer jumbo loans, super jumbo loans. We've done loans as high as $8 million. Our loan to values on the super jumbo loans obviously are a little bit less than on your standard conventional loan amounts. We do single family loans, and we also do vacant lot loans. I'll go into a little bit about each of those products, and I'll start with the lot loans.
Okay.
Our lot loan product is a temporary product because what we're looking for is for that borrower to eventually build on
a
it.
house, huh?
We are not in the investment lot program, so that product is a 3-year balloon product. 3 years allows the borrower time to decide when they're going to build.
Right.
Our lot loan product has a 70 to 75% loan to value, so they must have between 25 to 30% down on the purchase. There is no limit as to the purchase price. We can do a $5,000 lot, or we could do $1 million lot. There's no, like I said, there's no limit on that. Then our condominiums. Since we portfolio our loans, the condominiums, we don't require a condo questionnaire, which is huge in this town.
It is.
We've actually found where we've had to bail customers out because they've been working with other lenders for quite some time. And since we don't require a condo questionnaire, on a primary or a second home, we could go up to 80%. And if it's an investment condo, sometimes we have to refer those over to the commercial loan department, depending on if the borrower is a true investor, where they have multiple investment properties. Otherwise, if it's just a primary or a second, we can do those.
Let me, for people that might not know this, explain what a portfolio loan is.
A portfolio loan means that we keep the loan in our bank.
Right.
We don't sell it. So their mortgage payment is made to us monthly, where when you get a conventional loan, that loan is typically sold to either Fannie Mae or Freddie Mac, and then you don't know who you end up going to sell that to. So you end up with a servicer outside of the area. But for the time being, all of our loans are kept and serviced in our portfolio.
And then for the viewers that don't know about the questionnaire for the condos, what does that entail?
Typically, a condo questionnaire, they want to make sure that how many people in the condominium, how many units are rented, and if they have reserves, and if they're properly insured. We always have to make sure that the condo is properly insured, but we don't really focus too much on the investor ratio, because sometimes you'll have people who own multiple units in the same condominium, and then there are times when the condominium association doesn't have sufficient reserves, and that becomes a problem when you're going to try to obtain fixed rate financing and sell the loan to Fannie or Freddie.
All right. And your loans have a term of how long?
They are 30-year loans.
Right.
However, they are fixed only typically for the first 3 or 5 years, because our loans, we offer a 3-1 and a 5-1 arm, which means they're either fixed for the first 3 years, and then they become a adjustable loan that adjusts annually for the remaining 27, because they are amortized over 30 years. And our 5-1 arm is fixed for the first 5 years, and then it becomes a 1-year adjustable for the remaining 25 years. But all of our loans are amortized over 30 years, with the exception of the lot loans, because those are balloons.
Capped for a certain amount?
Yes. The caps on our adjustable rate mortgages are what is called a 2-6 cap, which means that the rate could adjust 2% per year after the first rate change, with a lifetime cap of 6%.
Okay. I'm excited about a new product that you're offering. That's I know how many people are out there that need it, but there is certainly a need for young professionals moving down here, and we've even sold some houses to people that are in their 40s that have never owned a home, which is, you know, interesting fact right there. So maybe you could explain about the new first-time home buyer program that you're introducing.
Yeah, we're really excited about that. Our first-time home buyer product is for, like you said, a first-time home buyer. Now, what classifies as a first-time home buyer is someone who has not owned a home, real estate, any type of real estate, for the past 3 years. Our first-time home buyer has minimum down payment requirements. PMI is required, however, the coverages are discounted. It is a Freddie Mac loan, and therefore, like I said, there is PMI that's going to be required.
Okay.
But the coverage is basically about 50% of what the normal cost is. It will be a 30-year fixed rate loan. Probably we will keep some of those in our portfolio. We may end up selling those loans at some time, but for the time being, we're really excited because they are minimal down payments. We can offer 97 and 95% financing, and like I said, that will be a 30-year fixed rate product.
Are you working with, I think the state of Florida has a bond program that will give you $10,000 towards your closing cost. Are you familiar with that?
I am not. However, you know, we would be glad to look into that. Because like I said, our first-time homebuyer product is something we've just rolled out and are, you know, getting out to everybody, letting them know that we do have it available.
And that's for condos and single-family homes? Or just single-family?
Single-family homes for the time being, yes, because if we decide to sell those, you know, on the secondary market, typically condos are very hard to qualify for secondary market.
Okay. Okay, and then you do commercial loans also.
We do.
I know you're residential, but maybe you could explain to some of our viewers, you know, that you do offer commercial loans.
Yes.
I'm sure you're familiar with a little bit about it.
We have several commercial lenders in the bank, and they would be more than happy. We do a lot of commercial financing in the area. I don't really know a whole lot about it, and I'd hate to, you know, try to give someone information about something I'm not that familiar with. But any one of the commercial lenders at our bank would be glad to speak to someone about what they have to offer.
And one other part that I think is important with dealing with you, from at least from my customer standpoint, is, and again, this is in your department, but I'm trying to let our viewers know that you're just not mortgages, you do commercial, do regular mortgages, is you have a title company within the bank too that you can kind of work with also to do the closings, right?
That is correct. The bank owns a title company. It is First National Title Services. We have an experienced attorney on hand, along with a very experienced closer, processor, and it actually works very well. We've done lots of loans with you where it's all kept in-house under one roof, and we can communicate with each other, and that has been a huge success for us as well. One other product I'd like to talk to you about, Jim, is we do offer home equity lines of credit.
Okay.
Yeah, our home equity lines of credit are very, very popular. It's been a very successful product for us. We have a consumer loan department that also focuses on different types of consumer loans. So anyone in our bank, we've got 2 people in that department, and they would be glad to help answer any questions for any of your viewers.
Yeah, I missed that. I don't. But I'm glad you brought that up.
Yes.
The one part that I think, after talking to you, I think one part that's very important dealing with you is your underwriting department, which I think is, you know, outstanding. It's within the bank, and you know, I think they do an excellent job. So I think maybe just give our viewers a little background on your underwriting department.
Absolutely. Yeah, we are very, very fortunate to have a very experienced underwriter. All of our loans are underwritten locally. All of the decisions are made locally. Loans up to $1 million are approved by the senior lender. Anything over that has to go to loan committee, but everything we do is underwritten and approved locally. We can typically our turnaround time is about 24 to 48 hours for an approval. We tend to get a lot of people call us because they've got mortgage contingencies that are about to expire, and they've been working with other individuals or other lenders, and they just can't get that approval, and we turn them around pretty quickly. Our underwriter has probably 15 to 20 years of underwriting experience, And we're very, very lucky to have her.
You're very lucky to have her.
Yes.
So, Leticia, we're going to take a little short break, and we're going to be coming back with a question from Morgan that somebody wrote in on our website on, okay?
Sounds good. Thank you.
Be right back.
Thinking of buying or selling a home in Naples, Marco, Bonita, or Estero, Florida? Think of the most experienced York Real Estate Group associated with the #1 brokerage in Naples, Downing Fry Realty, which produced $1.9 billion in sales in 2014, controlling 43% of all transactions in Naples. Jim, Michael, and Morgan York make up the York Real Estate Group of Downing Fry Realty. With over $250 million in sales transactions, they can offer you the expertise and trust you want and need in a realtor.